Okay. And we're live? Was that my cue, Galia? Are we doing it? Tuesdays at TNT. It's lunch hour. We're drinking water, not beer, because we're keeping it professional. And we're having fun with our friends here from the VC industry today. This is the last of a 6-week series where we're doing a deep dive into the due diligence process, raising money. And I'm really happy to be co-hosting this with Tim Lin, co-founder of Startup TNT, and two special guests, Yasmin Al Hussein, our past deal screening analyst, our very first deal screening analyst for our fall investment summit, now an analyst with the Accelerate Fund, and Peter Hung, someone who hangs out at TNT on a regular basis. Many of you have probably met him. Great local guy, actually great Vancouver guy, not a local guy. Great Vancouver guy from Rhino Ventures. Welcome, Peter and Yasmin. Say hello.
Thank you. Appreciate the welcome, and hi, everyone. We're so happy to be here today.
All right, so let's kick things off. The goal here is to kind of give just kind of a bit of an inside look at what due diligence looks like from the perspective of a venture capital fund. And just so everyone knows, Accelerate Fund has co-invested with some companies from Startup TNT in the past. And Rhino Ventures is a well-known investor in a great local Edmonton company, Shobi. So both of these funds are investing in Alberta deals, and we like to see them invest in more of them. So Peter, why don't we kick it off with you? Tell us a little bit of background about Rhino Ventures and how you got involved. What Rhino Ventures?
So Rhino Ventures is an early stage fund based out of Vancouver. Like you said, we invest in tech-enabled businesses across Western Canada. The premise of the fund is that the partners want to be the investors that they wish they had back when they were founders. Essentially, when they were founders, they found out that working investors is not the most delightful experience, to say it in the nicest way possible. So they want to be the people, they want to be the best partners possible for founders. And so they also found that in the Western Canadian ecosystem, there's this supply and demand disconnect for early stage capital. A lot of talented founders, just not enough capital to support the ecosystem. And so that's where Rhino Ventures came in. And we're extremely excited to be able to participate in not only British Columbian companies, but also companies based out of Alberta, Saskatchewan, and Manitoba as well.
And can you tell us just a little bit of like either a sector focus or deal size, like check size you're typically doing, stage of the company, just kind of like quick nuts and bolts about the fund?
Yeah. So we typically write initial checks between $1 and $3 million. We typically lead in the rounds that we do invest in. We're industry agnostic, but we're most known for investing in edtech, fintech, and also e-commerce businesses. More recently, the themes that we're exploring is the idea of the creator economy and entrepreneur enablement platforms. And also, we're also really excited about the future of food as well. We see a lot of potential. The partners are big animal lovers. So we're really extremely excited to see where that would take off.
Okay, and I want to give you an opportunity to tell one very short story that you told to me a few weeks ago. What was some big news that just came out of Rhino in the last couple of weeks? What happened with you guys?
So hopefully we didn't bombard your LinkedIn feeds too much, but we had a Rhino portfolio company, Thinkific, list on the on the TSX. So they IPO'd. The interesting relationship that we have with them is that we're the only institutional investor in the business since the very beginning. Despite all of the inbound VCs from Silicon Valley knocking on their door, this is incredibly awesome business. Think of it as the Shopify for knowledge commerce. It's not like a Udemy or Coursera. Thinkific essentially enables course creators to create, market, sell, and manage their course business. So it's incredibly exciting for Thinkific, but also for the Western Canadian ecosystem. We're seeing a lot of unicorns coming out of Western Canada, and that is just amazing. And that just is a testament to our thesis, and that's the center of the universe is not based out of Eastern Canada or Ontario.
That's, you know, I know that you didn't directly invest yourself with your own money, but you're probably the first investor I've met that has invested in unicorns. So congratulations, Peter. That's very cool. In fact, I just saw Thinkific referenced in an article about how Canada is now a rising star and Silicon Valley is taking notice. And it was by this VC that's moving back to Canada. It was in the Globe and Mail, so maybe some other people saw that article. Anyways, Tim, let me hand it over to you.
Yasmin, welcome. This is awesome. People will know you already from TNT, but can you give a little bit of a brief overview of how you've shifted over and how it's been and what you're up to over there?
Of course, yeah. Thanks so much. I have shifted from TNT into this new landscape, but really my background getting here is so varied. I'm from the nonprofit space, so who would have thought that I would have ended up here? But loving every minute of it. I've always wanted to be a part of the startup ecosystem. Get to know how I can help startups within Alberta specifically, and Yaletown really matches that. Accelerate Fund does exactly this. We are an Alberta-based fund that is an early stage companies for B2B markets. So it's so exciting of a thrill of a journey of 5 months. We were just saying this online earlier. I've only been here for about 5 months now, but learning a lot along the way, doing deep dives into these companies that are, on the trajectory for success coming out of Alberta, and learning more about different industries and how our tech sector as a whole is growing. And I'm happy to be a part of it today and hopefully into the future as well. And just learning more about more companies, whatever is new and coming up. I want to hear more about it. I want to meet founders and get to know everyone in the community.
It's awesome. And you alluded to it already. It's Alberta Companies, B2B focus. Can you give a little bit more context into how you guys get involved? Is it, check size and how that mechanics of it work?
Of course, yeah. So we invest in Alberta-based companies, first of all. So 50% of the exec team does need to be based in Alberta somewhere here. We are B2B tech companies, but pretty industry agnostic. We don't kind of focus on one specific industry. We like to diversify our portfolio to the best possible way. So not, too much investment in one specific area, kind of lay it out over different technology sectors. We do try to make sure that someone on the internal team either has some expertise in that area, or we have trusted members of our network that can help kind of gauge opportunities, go back and forth on the technology that's at play here, and understand a little bit better of the entrepreneurs, the founders, and their tech behind their company. So, typical check size for us is about 250,000, but that does vary on a case-by-case basis. Of course, there could be cases where we might add a little bit more, or even there's some founders that are repeat founders now, some people that are coming out of their already exited, acquired companies, starting some new ventures. And we love to see those entrepreneurs because they have a little bit of a, thick skin. They know what they're doing. They've been around the block already once or twice, and hopefully have taken those learnings with them into this new venture. So that helps us a lot to say, yeah, we can maybe support you at an earlier stage than typical, because we have a little bit of understanding that where you're at, what you're doing. So another qualifier for us is to have product market fit. So we do look for at least some early revenues of these companies, just so that we understand you have customer validation, you have a value proposition that has actually been, validated by your own customers out in the market. So that's kind of the space we play in. And we're hoping to look for new ventures, especially new ventures, and especially clean tech. That's one thing we do want to look for. And you guys just had your summit, so we're definitely interested in keeping up with some of those companies from there.
It's awesome. And you, speaking of summits, you invested in TrueAnkle, which is awesome. And of course, Drug Bank, both of the winners in the last two Edmonton summits. This is it's awesome to have you along. It's great.
Yeah, we're like 2 for 2 at this point. So I don't know if this is a trend or a pattern of some sort. Maybe. I hope so. I hope we can keep going. But it was great to co-invest in TrueAnkle, and their round just completed. So we're happy to have that announced kind of later this week or pretty soon here. But it's been an awesome adventure, and like I said, we hope to keep seeing great companies come from TNT and hopefully co-invest.
Awesome. Zack, what are we talking about today?
Well, you know what, guys? Why don't we dive right into, just give us a little overview. Peter, why don't we start with you? What does it look like? Give us a little sort of high-level overview as a starting point of the process of raising money with Rhino Ventures. What does that look like? What's that process look like?
Yeah. So before we dive into the process, I think the core philosophy behind the diligence process is that we don't want to waste founders' time. So stemming from there, we do everything on a weekly stage gate process, where it typically takes between 4 to 6 weeks from the very initial meeting that we have with the founder all the way until signing or sending our first term sheet. So quick overview is that we would have an initial meeting with the founders in the first week, get the download of the business, address some of the most interesting and our biggest concerns of the business, take it back to the team, review it, and alongside with the partners. And then if we like that, we would bring the partners on for a second call with the founder. And afterwards, if we like that, we would open up the data room. We will dig into that. We'll build out something called a data pack and present it to the larger team at Rhino. And if that's good, we would bring the founder on to the following partner meeting, and where they can share their story, their business, and exactly the most interesting, and address some of the biggest concerns that we have at the time. Once that's good, we'll essentially break into our own red team, blue team, discuss the business on both sides. And eventually, if that's good, we would send out the term sheet. So that's the quick download on our process.
So how long does that process take start to finish? Or I'm sure it varies
4 to 6 weeks.
from company to company, but
Sorry?
ranges. I imagine it can vary quite a bit from company to company how long it actually takes to go through that process. But
typically 4 to 6 weeks. But we would
that
do
whole process is 4 to 6 weeks. That seems pretty efficient, actually. I'm impressed.
Yeah, we try to be as efficient as possible with the founders, as we don't want to waste I think the last thing that founders would want on their calendars is more time with the investors nitpicking on their business and stealing time away from them actually running and scaling their business. So we try to be as efficient as possible throughout the whole process.
Okay. Yasmin, why don't we turn it over to you? Do you guys have a similar process? What does the process look like for an entrepreneur going through the Accelerate Fund?
Yeah, it's a very, very similar process. I'll say we do also have a stage gate approach, and it goes to some of the same first meeting points. You meet one of us one-on-one, you get the down low, and then we pass it through their team to make sure that everyone is on board, and have any kind of even pre-due diligence checks and balances made to ensure that we do know what we're going into before even diving into the data room and putting time, resources, and kind of energy into a very intensive DD process. So for us, that can take a little bit, a couple of weeks to make sure that we are okay to go ahead with due diligence, and it's the opportunity we want to focus on at this time. And then from due diligence, we start to do a lot of our research. We put together an investment memo. And as the team at Accelerate Fund, we present that to our investment committee comprised of partners from Yaletown. And they ask some great questions along the route as well, and make sure that, if they're all good with that process, they'll go ahead and approve. We move towards legal due diligence, kind of an external party process. And then by the end of that, if everything does come back quite nicely, we will go ahead and sign documents, sign term sheets, and move forward with funding after the fact. So pretty much, same approach in a way. And we do have one person that holds the pen during the investment memo, but supported by the whole team. And in general, kind of time-wise, I think on average, we can do about 6 weeks for the whole process from initial meeting. But deep due diligence dive does take about 3 to 4 weeks on average, at least.
Awesome. And so Yasmin, you referenced, going to partners, a little bit of back and forth. Can you, give a little bit of insight to people that aren't quite in the loop as to what your role is and how that compares to a partner? And are there other levels in between? How does it all kind of shake out? What's the hierarchy and the flow of this?
Yeah, that's a great question, and something I had to learn very quickly too back in January. So my role as an investment analyst, I am the person that can, do some of these first meetings with entrepreneurs and founders, make sure that they are a fit for our investment thesis for our fund, kind of be a first stage approach. On the team of Accelerate Fund, we do have our investment manager, as well as a partner from Yaletown, and then the industry committee chair from the A100, David. So the four of us are kind of the AF3 team. And so this approach, there's that stage gate is first kind of, you'll first maybe talk to myself or the investment manager, Arden, and then we'll take that to the greater AF3 team in general. And as for investment committee, there are partners from Yaletown. And this kind of dives really deeply into what Yaletown Accelerate Fund is, but Yaletown is the VC, in fact, right? Those partners are the ones that have to approve the investment end of the day. So Accelerate Fund is a one of Yaletown's funds. So two partners from Yaletown will say yes or no to this kind of opportunity and investment in whatever company we're looking at. And they do have kind of final say on whether we go through with something or not. Our Accelerate Fund 3 team really are built to suss out concerns, risks, and the overall opportunity, and make it kind of the best show possible for our partners in general. So we're kind of the first step approach, if that makes sense.
Cool. And then Peter, is it kind of same or similar at Rhino, or where is it hugely different?
I think, largely it's the same. The part for us, I think we spent, so Jay is quite ingrained in our diligence process and also in the deal flow process as well, which is something that we greatly appreciate, as it really adds perspective to every opportunity that we invest in. We tried our best one of the things that we ask ourselves in the diligence process is how might we how might we be wrong? And essentially, that's its way to bias check ourselves. Specifically, if we like the business a lot, then it's a way to ensure that we don't forget a lot of things that may be concerns or deal killing items. Or if it's the other way around, where a business is maybe something that we would typically pass on, or we couldn't really see what exactly is the unique aspect this business is bringing, we will ask ourselves the question, how might we be wrong? And essentially try to build the most objective perspective on the business altogether. I think at Rhino, we're a small team of 6 now, and it's really awesome to have this very flat hierarchy where us as analysts have the opportunity to lead an investment from the very beginning all the way to the very end. And the partners give us a lot of opportunity to essentially have ownership over the deal. So it's really great in terms of the culture that they've built and how everyone is deeply involved with the whole process.
And so both of your teams are super small compared to say like a Sequoia or A16Z or whatever. How does that impact this flow and the way that the fund works? Peter.
Yeah, so like at least for us, one of the things I touched on is we're very efficient, and so I think that with us, we don't have to worry about a lot of the I guess the bureaucratic processes of trying to pass things along with the team, or getting things through the hoops and whatnot, and all the process-based things. So we run ourselves a lot like a startup. We don't worry about like if you're an investment analyst or you're a manager or you're a partner, you have to get approval all the way through. Everyone is deeply involved and everyone shares their insights. And so I think that there's a really strong feedback loop within our team that's because everyone's involved, we get to learn from everybody's perspective and their experiences. And so that helps of us as well, and really helping us with the early on diligence process and finding things that really stick out, that are interesting, or maybe things that are typically deal killing items. And we're able to make things most efficient across the entire investment process.
Yeah, I'd have to, oh, sorry.
No, go ahead. You feel free to add to that, Yasmin. Go
Yeah,
ahead.
I was just going to say, honestly, I'd echo a lot of what Peter was saying. It is quite nice to have that kind of startup mode efficiency within your company. And back to what you were saying earlier about responsibilities throughout the kind of team, we do get to own the projects as a whole, which is really quite nice. And that helps everybody ramp up projects quite well. And you're all able to put your input into different decisions along the route as well. So it's great to see kind of the small groups, and no one's siloed into one aspect or skill set. You know, you only do diligence, you only do this. We all get to have a hand in the pot, which is great.
Okay, here, I'll for next question, I'll just take one that would just popped into the chat here from Clint. Is there specific minimum valuations or maximum valuations or percentage ownership that is required by the fund for either of you? Who wants to take that first?
Maybe I'll pass it over to Yasmin.
Sure, of course. That's a great question. It's something that we definitely take a look at, and it's of importance to us as a fund for Accelerate Fund 3. I wouldn't say there's necessarily like a minimum valuation or anything, but our ownership percentage does matter quite a bit for us. We are looking for on average a 3 to 8% ownership, just so that it has a meaningful position for us, but also we're considering your future investment rounds, your future fundraising, and what dilution that means for us and other co-investors, not only us in your round. We are looking at, to be fair and equal among the investors in your current portfolio or your current grouping. So we are looking for that kind of range. Of course, it's case by case of, by any means, it can go lower or up depending on what we are involved in and what stage of your company we're at as well. But that is something that we do get hung up on a little bit, just to understand your valuation and have a better flow of information of where you got your numbers from, what makes you believe that you can get to that next raise, that 2 to 3 time lift next next fundraising amount. So it's something of importance for sure for us.
Awesome.
Yeah, it's actually quite similar here as well. We don't have any hard numbers as to what determines a minimum or maximum valuation. What's most important for us is the reasoning and the philosophy behind why a company could be valued at 10x or 5x or 20x. It's really the reasoning behind it that drives the valuation for us, and we're comfortable paying for something that's 20x AR, for example, if it's justifiable.
Okay, I want to ask a question about deal sourcing and deal flow for your firms. How, maybe general question, how are you sourcing deal flow? How are you sourcing all these potential meetings that you're having with entrepreneurs? And are you taking cold meetings, cold intros?
Cool. Maybe I'll just hop in first. So I think with us, what's really interesting is that we think of reputation as our currency. So this is what we trade on. Our philosophy is that we can build a flywheel by having, if we work with high quality founders, invest in high quality founders, they would bring us opportunities with other high quality founders as well. And essentially, there's this whole flywheel effect. So we find our inbound pipelines incredibly useful, and we see a lot of good deals from there as well. At the same time, cold intros work perfectly fine as well. We try to put the most objective view on every business that comes across our table. So we try to limit ourselves from taking a big bite of humble pie that every single time we pass on a business. So I think so. Essentially, two aspects is essentially first we would look at our inbound pipeline. We also look at the cold intros as well. But also we would, if we have a specific theme that we're exploring, for example, with the creator economy, we'll do this top-down approach. We'll build the thesis, and then also look at companies that fall under that thesis, and we will reach out to founders ourselves.
Peter, when you're doing like that first contact meeting, what kind of features or characteristics really stick out to you that make you excited about the founder and the deal, that makes them stand out from other founders you've met?
I'm sure that there's a lot of different aspects to this, and it can be very different for Yasmin and other investors. But to me, I think two things really stand out. First is their unique insight on the problem, the markets, and why this founder has this founder market fit. I mean, I think that there's a lot of companies tackling similar things, but if they can really showcase that they have a unique insight to a specific problem, and that there is massive potential for this, that's also really exciting. And associated with that is this venture scale question that we ask ourselves typically when we evaluate an opportunity. So, normally when we think of venture scale, we think about like maybe around $100 million in ARR, and how can they get to there? Sometimes founders would put these models in with these hockey stick graphs in their pitch decks. We don't put a lot of emphasis on that. It's more about the story and the narrative that they build throughout their pitch and what they're sharing with us. So parts of what that looks like is the size of the markets, the scalability of the business and how they plan to scale, and also how they plan to build long-term defensibility against the many new entrants that comes in if that formula works, or the incumbents in the space that will be stepping on their toes if they find it interesting as well. So those two components, the unique insight plus the venture scale question, are the things that really stand out to us.
Okay, thanks, Peter. Yasmin, what about for you? You're focused on Alberta. What are you doing to source deal flow? And do people that don't know you or their Accelerate Fund, can they reach out with a cold intro and get a meeting?
Yeah, great questions all around. So we do have different ways to get our deal flow across the table, and we are open to any kind of methodology. So of course, We have inbound, applications to our website directly, which is great to see. We try to respond as optimal as possible. And then as well, anything like these pitch nights and whatnot that you guys host. I am usually the creep on YouTube watching most pitch nights. So, we love to see what's out in the community and anything as well from personal contacts. Like Peter was mentioning, you've got that kind of flywheel effect of companies already in your portfolio introducing you to further opportunities and investable companies. So that's kind of where we source different deals from. And have an understanding, and having a presence in the community is very important to us too. So hopefully people can come up to us and chat about their company. So a cold call definitely can work. I think like anything, it's always very difficult at first, but it's important for us to maybe have a connection point to you within the ecosystem or the community. Sometimes we are watching companies from months ago or even years ago. So by the time they actually maybe reach out as a cold call, they're not that cold because we've been seeing them in the community. We've seen their pitches progress and Q&A progress over the different months. So it's always worth it to come and try. And we take a critical eye to any opportunity, whether we know the founders in and out for years or we've never heard or seen them before. It's all evaluated with the same metric in a way.
And as you're talking, it's just kind of something that came to mind. Are you guys proactively reaching out to deals sometimes where you identify a deal and you reach out directly to them rather than the other way around? Yasmin?
Yeah, definitely. Yeah, exactly what Peter said. We do like to understand a little bit of the market space first to have some understanding that this is a potential we would like to do a little bit more digging into. But we're happy to reach out to companies and entrepreneurs that are of interest to us in our fund, of course.
And a lot of times those founders actually come from communities like Startup TNT as well. And I think one thing I want to emphasize here is that I'm just so incredibly, and Rhino is also incredibly thankful for such an awesome community of people from Startup TNT, and especially Zack and Tim's really running this whole show. So we're very thankful and grateful for having people like you, super connectors in the ecosystem, to help out with our process as well.
Well, thanks, Peter. It means a lot to us to hear you say that, because one of the big motivating factors for us has always been to try and help entrepreneurs build more relationship with investors and get make it easier for them to access capital when they're ready for it. So that's really awesome to hear that you're doing things like checking out those pitch nights that we have. Props to Tim here, who was really insistent that we run those pitch nights on a regular basis. So taking off and dropping by the happy hour. And to have fun, as Clint says in the meeting. Hey, one thing we haven't talked about, I'll pass it off to Tim. I think we should talk a little bit about like what happens post-investment. What's that list look like post-investment? Tim, I'll hand it off to you to ask that.
Yeah, so that question, but from me, Yasmin.
Great. Yeah, that was such a new question, Tim. Great. I know. It's post-investment. I mean, we don't drop the pen and say, see you later, have fun, hope you grow big. But we do like to continually be updated and involved in a certain level. Of course, we like to get updates either during our quarterly reports times or even more often monthly investor updates, on our board observer seat as well, just so we can keep up to date with what the company is doing and how their progress is going. We also ensure that we mobilize the team when an ask comes through. So a lot of these entrepreneurs will say, hey, this is our monthly ask from investors. Do you have connections into this space? Or do you know someone who would be a great hire for our sales development team, whatever it might be? We then pass it on to our internal team and we really start to mobilize our networks. And it's pretty cool to see that spread and grow and have people say, yeah, I'd love to apply. I'd love to check out this. So we're kind of like a pseudo recruiter, I suppose. Sometimes even Arden says he's a little bit of a recruiter once in a while because we love to help people out with their growth stages. And as well, advice along the way. We're not holding the pen on anybody's strategy or anything like that. But if the advice is of use along their kind of growth, our 2 cents matters to them, we would love to provide it here and there. And as well, once a company is kind of ready for their Series A stage financing, their next funding round, we are more than happy to do, demo pitches to give feedback and as well make connections to those next stage investors and ensure that they're getting those meetings together and they're in their best possible position. So whether that's hosting a workshop on your pitch, shoring up your financials to see what investors at that level are going to want to see, we want to provide those mentorship and those opportunities to have them grow, have them escalate and get their next financing together. So we like to, be their cheerleaders and help their success along. We want to see them grow, hopefully with our help.
I think so. Last week with Leggy, he was saying that these, monthly or quarterly or whatever updates are great from a relationship perspective and from the perspective of the like, I need help with this section. It's like they come through far too often, and it's awesome. So to your point, absolutely. Peter, is there anything materially different, or is it kind of the same shenanigans over at Rhino?
Yep, similar shenanigans. I think everything that Yasmin said, I think everything she put it very succinctly, and we share similar ways that we work with founders post investment. But just, I guess, more granular, we also help out with building out models. We're almost in a way like a contract CFO at times as well, adding a different perspective from there. We help out build pitch decks as well. One of which maybe most famously is the Thinkific presentation that we helped build that lives on CDR today for their IPO. We essentially are in our fund, we're hyper concentrated by design, so that allows us to dedicate as much or as little resources founders need without replacing their judgments. And so with us, it's just really great for us to be able to support founders through this approach.
Cool. Zach?
Well, we're just at time here. So I think to keep things on schedule, maybe we'll wrap it up here unless there's any final questions from the audience. I think both Yasmin and Peter would be happy to share their contact, or I already put their LinkedIn links in our newsletter. So I already did that for you guys.
Thanks.
And just want to remind everybody, June 17th, next investment summit. 10 companies will be presenting, 5 from Edmonton, 5 from Calgary. At least 1 from each city will be raising money at the summit, hopefully more. And thank you both, Yasmin and Peter, for joining us, and Tim for co-hosting with us. So
That was awesome.
Have a good afternoon, everybody. Great conversation.
Thanks so much for this. Happy to be part of it.
Thanks for having us.